It's the 28th of May 2011 and we're at the ACi Congress in Budapest. Today e-Forex is interviewing Luke Waddington of BNP Paribas, Corporate and Investment Banking Division. Luke is Deputy Global Head of Fixed Income Electronic Markets. Welcome, Luke.
Hi.
Luke, we've got a few questions to ask you here. A number of reports have indicated that e-commerce services are set to grow across all asset classes. In what ways do you think proposed regulatory changes to the FX market will increase future demand for electronic FX solutions still further?
I think it's a key question that's come up. I think a lot of businesses to date have run their businesses in silos, so FX, rates, credit. And even though these markets are considerably different in terms of the client requirements from an execution point of view, if you actually go down the trade flow and the product, the technology, the process, the operations, there's a big synergy around those things. And I think the regulatory changes at the moment are forcing banks to make sure that they can offer a cross-product electronic suite of products to clients. So what we're doing at BNP Paribas is making sure that we look at those synergies downstream to make sure that we can, for example, look at reporting, real-time reporting across assets, to make sure that the connectivity and the execution DMA and things like that are all across assets and using the synergies of the technology for that.
Luke, a few years ago, some commentators were predicting the demise of single bank platforms. Why hasn't that happened, and why are clients increasingly attracted to the value proposition of this trading model?
I think everyone still has that way of thinking about the single dealer platform. I still think people think that there's a real question to be asked whether you should invest and build one. At BNP Paribas, what we've done is looked at where the future of electronic market lies and where the single dealer platform will lie, and where we believe it's not in the market that's quite crowded right now, which is in the fixed financial institutions, banks, who are using aggregation multi-bank platforms as a standard tool. So single dealer platform has limited relevance in that space. Where we do see that single dealer bank platform has relevance is where BNP Paribas has strength, and that is looking at the small, medium enterprise market, looking at the corporate, looking at where we can trade in so many different countries through our internal networks, and we can use the single dealer platform as a way to express that. So, we look at putting single dealer into places that are not seen right now as being traditionally an electronic market. And I think that not every bank can do that because they haven't got the exposure to those such a broad geography of clients as well as countries.
Tell us about they say that BNP is the giant you never heard of. Tell us a little bit about that now that we're on that subject.
The thing about it is that BNP Paribas has purchased very wisely a lot of different banks across the world, and so there's a very large sum of parts in terms of the BNP Paribas group. So one thing that is fundamental in sort of connecting those different parts is technology, and so how we we'll start to work and integrate a lot of those businesses is by using electronic markets and providing execution, process, operations, know-how from the fixed income business across all those partnerships. So in that sense, it's the size of BNP Paribas now is a great strength to try and organically grow sort of electronic business.
How many people work for BNP?
Globally,
yes,
205 thousand people.
So it's a pretty large number.
It's a very large number, yes.
Moving on, is the future of electronic Forex going to be about building faster and smarter FX e-commerce engines, or maybe something else?
Well, I think this comes back to the single dealer platform point as well, where at the moment, if we look at the traditional FX electronic market, it's all about speed, latencies, engines, and that's all in the sort of financial institutions sort of space, bank space. What we believe is that the market will be a lot more focused around the whole trade flow, so around things like post-trade, around not necessarily functionality, but around how we offer a full suite of technology products to a client, and we go from pre-trade through to execution through to post-trade, and that opens up, and when we can do that properly, and I don't think the market's right there now, you can open up a whole new client base to yourself, and that goes back to what I just said before in terms of SMEs, in terms of corporate, in terms of a whole other host of client sectors. So I think that there was always going to be a place for speed and latencies and the way we deal with it, but there's also going to be a growth through regulatory change and things I've explained just now, a whole growth in actual technical solutions down across the whole product flow.
Do you agree with some analysts that clients should consider treating their investment in electronic FX as a strategic asset?
I think you have to, and I think the regulatory changes are consolidating this view. But there is two schools of thought here. One is that the more that you invest in electronic and electronification of a business, the more it becomes more like a utility, and therefore it's not actually an asset, it just becomes a very sort of low-cost way of doing business and an efficiency within the business. What we believe is the fact that when you actually do bring together a lot more than just execution tools, and you do it across assets and you do it across the whole product flow, what you have is you have a product that banks have got as an asset. So before, banks traditionally sold liquidity, risk management, pricing. We're actually now selling process, operations, middle office, IT. So the assets of the functions within banks become a product. And so what we're trying to do through technology is wrap that all together, and that becomes not only an asset as a business and a revenue stream, because it does generate real cash revenue, it also becomes a new product of the bank, which has always been there, but it's never been really commercialised. It's always been seen as a utility function, but we actually believe it is a strategic asset.
Luke Waddington of BNP Paribas, on behalf of e-Forex, thank you very much.
Thank you.